Two Bulls in a China Shop is brought to you by these great companies that are giving us money to let you listen to their stuff.
Bullshit, Kyle. We make this show. You and me. Two Bulls in a China Shop is brought to you by us.
Someone's got to pay the bills, Dan, because it's not our trading.
All right, roll them.
By giving, people will be helping Nationwide Children's Hospital find cures, brighten patients' holidays, and people will be able to support their neighbors when they need it most. When they donate, they will activate in real time a butterfly-inspired light show for patients this holiday season. They will add holiday cheer to the lives of kids who really need a reason to smile. No one wants to think about their child being sick, but should that day come, the donation they make this year could help the care their child could need in the future. Please give now at nationwidechildrens.org/give.
What could be germier than a bathroom doorknob? Try unclean countertops, TV remotes, fridge handles, gaming controls, and all kinds of things around the house. Help your family stay happy, healthy, and uninterrupted by illness this year with Clorox Disinfecting Wipes, Clorox Bleach, and Clorox Disinfecting Mist. They kill 99.9% of cold and flu viruses on hard, non-porous surfaces when used as directed. So get germs out of the way and get on with your day with Clorox. You're unstoppable when you start clean.
Sling TV has something for everyone. It really just depends on what kind of mood you're in. If you're looking for sports, Sling's got you covered with pro and college football and basketball, baseball, hockey, soccer, golf, racing, and so much more. Sling also has reality TV, so you can keep up with the latest gossip with today's hottest shows on channels like TLC, Bravo, MTV, and more. And don't forget about news. Get up to date with today's most trusted sources like MSNBC, CNN, and Fox News. Feeling adventurous? Explore thousands of movies and shows on demand. So what kind of mood are you in? No matter what your answer, Sling is what you need. Getting Sling is easy. Sign up and start watching in just 5 minutes. You can stream on any device and record up to 50 hours with included DVR space. And the best part is, you can pause or customize your subscription at any time. Check out sling.com for special offers. Sling, the TV you love for a price you'll love. Try it today.
Hey everybody, I'm Ian.
And I'm Mike, and we're the hosts of In the Scenes Behind Plain Sight, a rewatch podcast for a TV show you may have forgotten.
Or maybe it never existed.
We'll rewatch all 5 seasons, episode by episode, and we hope you'll join us. Or maybe we never existed.
This'll all make sense, or maybe it won't, when you listen to In the Scenes Behind Plain Sight, wherever you get your podcasts.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from 2 idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face. Well, hello everybody, and welcome to the China Shop. I've got Eric here, just itching to finish the introduction here for me, so I'll just go ahead and turn over the floor to him.
Hello, everyone. Welcome to the China Shop, where Judy kicking and face slapping the doors open. If you're in for a day of debauchery, welcome to everybody. That was the end.
Kind of ran out of steam there, huh?
I was going to go with welcome, but then I realized the phrasing of it seemed like I was supposed to say more. And then I was like, oh shit, set myself up for failure here. And yeah.
Not so easy, is it? No, I'm just kidding.
I mean, I still think the intro was pretty fucking solid.
I think you did a pretty good job. In fact, I'll probably use it for every single one of these going forward.
It's pretty fair. And I mean, just feel free to direct all royalties to my dog Thor, because he has developed a very particular taste on the bones he'll accept.
Hopefully he loves pennies, because he'll be getting a lot of them. Whoa, fucking crazy day today, huh, Eric?
Dude, there's a couple really interesting things. Actually, 2 of the things you brought up, I hadn't been paying attention to myself. So it's actually kind of fun to take a look at some other stuff and see what's going on. The buyout stuff on Horizon is actually really interesting to me. I love looking at stuff like that.
We started having a discussion and realized how stupid that was and hit record. So I'll go ahead and catch the listeners up. Horizon Therapeutics, ticker HZNP, jumped about 30% on talks of a buyout by some of the different pharma giants out there, like Sanofi and Amgen. Now, there's no formal offers that have been made yet, and since Horizon is based in, it looks like Ireland, in accordance with the Irish takeover rules, any possible bidders must say whether they intend to make an offer or not at the latest by January 10th of 2023. So there's still no certainty, but I think the speculation is that they should see somewhere around, if they're going to get an offer, like a $2 billion markup on the $18 billion market cap that they currently have. And we were just kind of diving into the options. So I'll let you go ahead and kind of talk about what you're looking at there when you're digging into it.
Yeah, for sure. Like we were discussing, one of my favorite things to do for buyouts and stuff like that is pull up the options chain, because there's a lot of really fascinating information that we can glean from options. And there's a couple primary drivers to this. One of the main ones as it pertains to this specific scenario is normally if a deal was leaked before it's announced, you can see it in the options. More often than not, the smart money is going to go to options, and it's because of leverage.
Yeah.
Because of leverage. If they know essentially something is going to happen, I would rather get more return on my dollar than return dollar for dollar, which is really the difference between derivatives and equities. If there was something with more leverage, they would trade that.
Right.
But it just happens to be options is the best that typically is available for these folks. So normally when we look at options, there's a lot of, it's almost like looking at a stock chart. It becomes as informative as that in a lot of ways. And one of the primary things I like to look for is just open interest and dispersion of open interest. So the way to think about an options contract is whenever somebody buys a contract, somebody sold that contract. There's a counterparty.
Right.
So when we talk about open interest, we're just saying, this is the number of current active contracts. This is different than volume.
Right. Because volume could be closing out an open position, right?
Exactly. Volume simply tracks transactions. And when we look at open interest, that is active contracts that have obviously those two counterparties involved.
Mm-hmm.
Okay. So we can gain a lot of information from that alone, primarily because if we look at, to start us off, like a simple example to prove a point, if I pull up SPY and I look at the open interest for all expirations right now, I see 7.7 million calls and 13.1 million puts. This is very normal, especially in indices, but more often than not, people like to buy puts to hedge risk, and big institutions do this. This is exactly why there is a risk premia. It just goes down to a whole strategy conversation that I'll save everybody. It might arouse me immensely, but I know most people are probably starting to fall asleep.
But the bottom line is that options are supposed to be used as like protection. Like, you think of them like insurance.
Well, sort of. I wouldn't say supposed to, because...
Sorry, I meant like that. Isn't that like how the concept came about?
Well, options really came around for two reasons: speculation and risk management. But really the risk management aspect that you're highlighting applies a lot to commodity futures. That's where the whole futures market was developed.
Right.
Which is, if you own a supermarket and you're selling corn and you want to be able to stabilize prices, you essentially create a forward contract, aka futures contract. Options are similar but slightly different. Both of them obviously have two functions, as you're pointing out, one of which obviously is speculation, leverage. The other one is for hedging efficiently, which, is exactly what you're highlighting. But when we look at options, depending on what we're looking at, very often we will see what we call put skew. Puts tend to trade more expensively, and that's reflected because there's more of them traded. There's a higher demand for them. And again, right now in SPY, there's 7.7 million calls and 13.1 million puts. And that's not even like a crazy put skew. That's like very, very normal. Now, if we hop over to our other subject, Horizon Therapeutics, as I look at that across all expirations, I see 27,000 calls. So obviously the first thing, in an order of magnitude smaller. So don't worry about like the gross number. It's more the ratio that I'm highlighting here. But Horizon has 27,345 calls and 9,501 puts.
So the skew is the other direction.
Exactly, which is abnormal. Just about always it's abnormal because, again, the entire market of options, and for a lot of strategists, the variance risk premium is a big part of how we make money. And you can get more of that on the put side because of the way things are priced. But every once in a while, we'll see an inverse trend just like this. So we can actually go into the open interest to see, of all of the current expirations and strikes, where are we centered? Where's most of it sitting? And the 16 DEES 2280 calls have 3,438 contracts. So about, like 10% of open contracts, like a huge, huge amount. The 17 Feb 85s have 3,200. And one other one of note is the 20 Jan 23 80s have 2895. So what I'm highlighting in very early expirations, and obviously closer to where it was trading at the time, there's a lot of open interest there. So what I would do now, normally, we haven't had time to do it just because I just found out about this now, but what I would do is actually pull up price charts of all of these and to see when the volume started to spike on these, because that's when you can really tell if there's insider buying going on. I actually have alerts set up for a lot of things once they hit certain thresholds like this, because they can be just immense trading opportunities.
Right.
But yeah, super, super cool thing to check out. I'm stoked that you caught this and brought it up because it's a fun one to talk about.
Well, I wish I would have caught it, a couple days ago, but the learning opportunity is probably more beneficial than the opportunity to make a quick buck.
Sure, you can console yourself with that. Yeah, one other thing on it. Sorry, I just pulled up one of the charts because I was super curious. And the 16 DEES 80 calls that had a ton of volume on the 4th of November, there were 2,692 contracts traded.
Yeah, that sounds suspicious.
And then on the 3rd, there was 1136. So between those 2 days, right, that takes it almost 4,000 contracts that were traded. But get this, on the 2nd of November, 187. That's it. On the 1st of November, 2. On the 7th of November, 20. That's insider trading. That is somebody who had good information and they actioned on it 2 weeks ahead of time. That is awesome. I totally missed it, but those are like some of the funnest things to be able to look back and look. That's wild. That has had a 822% appreciation over the last month. Those options.
Yeah, somebody just made a shitload of money.
Yeah.
When does the open interest actually update on Thinkorswim?
Perpetual.
Oh, it's constantly changing? I thought that was something that updated like once a day.
No, that would be awful.
Okay. I thought the volume was always updating, but not necessarily the open interest.
Oh, I see what you're saying. Sorry. Yeah. So sorry. So the volume moves throughout the day. You can see the open interest move throughout the day, but if you're looking at like these open interest charts, they don't move throughout the day. They will be settled at the end of the day. But if I open up, let's say the 16 DEES options chain, I can see open interest move as it's trading. So it's it's kind of both. But to your point, like you're not going to see it reflected in like put call ratios or anything unless you have your own think script set up. I have a couple of them, which is why I answered the previous way. But
yeah, because I just look at the open interest and volume on the Thinkorswim options chain on the active trader. Not the active trader. I'm sorry. Just the option. Yeah, when you pull up the options chains on Thinkorswim, it'll show you open interest on there, and I don't think I've ever seen that update as the day went on.
Yeah, so you could probably see that down under today's option statistics, but you're right. Those won't move regularly. The graph at the bottom, the product depth, that I don't think moves regularly, but you can see in the individual change themselves. It'll typically show you there. And then one of the other things I like to leave open, which I'm actually going to go through after we hang up here to just do a little bit of more homework, but you can look under options time and sales. That doesn't give you overall open interest. That'll get updated end of day, but you can still see, kind of what's moving around, which is interesting.
Awesome. Can't wait to hear what you find.
Dude, so interesting.
All right. Well, should we move on to some of the other big news?
Whenever I'm still looking at these options, man. I'm so blown away, dude.
All right. Well, while you're distracted, I'll just go ahead and provide a quick update on one of our favorite figures that we've paid attention to over the years. Jack Ma has been spotted in Tokyo. So I don't know if you're familiar with the Alibaba founder.
Good old Jack Ma. Yeah, man.
Yeah,
There's
yeah.
actually some really good conversations between him and Elon Musk. So yeah.
Oh, I was not aware of that.
Wait, really?
No, I'll have to go look those up.
I'll send you the link now so you can include it.
Oh, please do. No, but if you remember back in 2020 when he kind of just disappeared from public view after taking to a microphone and trashing the Chinese financial system.
It's a good life decision, I suppose.
Yeah, especially when you're dealing with China.
Not.
But it is good to see that he is alive and well. It looks like he's been hiding out there for about the last 6 months. It seems like he's also been making frequent trips to the U.S. and Israel, of all places. I'm guessing he's probably not welcome back in China anymore.
I'm actually really, that's another one I have to look more into because I've also learned a lot recently about the relationship between the Chinese government and businesses there and how it's just a fascinating relationship to me. So different to what we're used to here in the US.
Yeah. In fact, there's a kind of hints of that in this article. They're talking about, let me see if I can find it. Yeah, the spotlight on Ma's activities coincided with Beijing's push for, quote, common prosperity. It's a concept that the rich must share their wealth with the poor to create a more equal society. A drive hit tech firms as well as property firms, which are forced to reduce their debt levels as authorities sought to control high home prices. It looks like the government's able to dictate the policies of these companies, and that's it doesn't sound like that's good for business owners.
Yeah, they have a tremendous amount of say.
Yeah.
And I've always been actually pretty fascinated with Alibaba's ability to even continue a relationship, but something like this is, just even more interesting. Essentially, that, man, it's so interesting because I actually have a friend who's Chinese, and they were messaging their family that's back in China about the lockdowns.
Yeah,
and they were like messaging like their parents, and they were like, oh man, the lockdowns suck. Sorry, you guys have to go through that. And literally the parent messaged back like, don't say that.
Oh yeah.
Very clearly telling you, what's going on. And it's like, that's just so wild to me. But it seems like, China could do a lot of damage to something like Alibaba if they wanted to.
Well, they already did when they kind of scuttled the Ant IPO, didn't they?
Right. Yeah, I guess that's true, huh?
What was the other thing they were doing? Do you remember seeing those stories about the people trying to go to their banks? And I can't remember what the name of the province was, but whenever they use their travel cards or whatever it is that says that they don't have COVID, that allows them to move about between the different cities. As soon as they step foot in that province, it turned to red, and basically the authorities would come pick them up and quarantine them. All they were trying to do was get to their bank.
Dude, it's wild. And I know that even for a while, the Chinese, like the protesters, they were starting to use airdrop to communicate with one another, right? So that they didn't have to send stuff over the network. They could just send it to the devices directly.
Yeah.
And the Chinese government literally started to alter airdrop settings on people's phones.
Wow.
Yeah, so that you couldn't do it. It's so wild. But taking it back to Jack Ma, it's one of those things where it's like, I'm waiting for literally at the seat of my chair, what happens next?
Right.
What does China do with Jack Ma if they're not happy with what he's done? And I literally have no benchmark to even create a hypothesis. I have no idea. Do they fucking assassinate him? I don't think so. But is that completely outside the realm of possibility? I don't think so either.
Well, I think at this point he's been quiet enough that they made their point, and I don't think they really are worried about him too much anymore.
Potentially, but again, there's a certain level of rational thought that we apply,
right?
And there's a perspective of rational thought that they will apply from their perspective. Because who's to say that Jack Ma just stays quiet now into perpetuity? Are they threatening of his family, or you know what I mean? It's just stuff like that is so interesting to me because even though that sounds like very personal stuff, it translates to the market and the way that the U.S. and other companies will view the stability of Chinese companies, which are obviously still a big deal. I mean, Baba has had a fall from grace, but it's still an extremely viable company.
Yep.
Yeah, it's wild, man.
Okay, so I guess we should probably talk about what Powell said today, since that did move the markets like crazy, and that's probably what people are tuning in to hear about.
Me.
I know. I think everybody's sick of discussing Powell. I did read through his speech, though, before we jumped on here. because I was actually surprised to see something that I've been saying for the last 2 years in the speech, where he's talking about the early retirees making up a key percentage of the job openings that are out there. It's been fueling the labor shortage. And we've been saying that, like, the people that didn't have to work when COVID hit, and they just retired and saw no reason to go back. So it was interesting to see Powell finally, at least this is the first time I'm aware of that he acknowledged something that we've been saying.
Yeah, that's interesting. So I'm reading like a specific section in here. It looks like it ties to that. It says the data so far do not suggest that excess retirements are likely to unwind because of retirees returning to the labor force. Older workers are still retiring at higher rates, and retirees do not appear to be returning to the labor force in sufficient numbers to meaningfully reduce the total number of excess retirees. The second factor contributing to the labor supply shortfall is slower growth in the working age population. That was also interesting.
Yes.
The combination of a plunge in net immigration and surge in deaths during the pandemic probably account for about 1 to 1.5 million missing workers.
I know immigration is kind of a touchy subject with some people out there, but I mean, really, that might be the only way to fulfill the labor shortage, is to have looser immigration controls.
I think that could be part of it. I do genuinely think that Americans in general also have become, like, way too many people have grown way too accustomed to a lifestyle they can't afford. And like, there's a lot of Americans that look at jobs and are like, oh, well, I'm not doing that. And it's like, well, you're in fucking credit card debt. What do you mean? Like, if I was in credit card debt, I would literally be doing everything within my power. But there is definitely a sense of entitlement that I bring it up because I am curious if that will change as opportunities kind of shift, because it is actually kind of nice to see some of these bigger companies, like even what Elon's doing with Twitter, when everybody's like, oh, we want to work from home. And he's like, okay, cool, go work somewhere else. Like, like there's a constraint. People want to be treated really well, and I don't blame them. But the fact of the matter is, if you work for somebody else, you don't get to make the rules. You work for somebody else. So I'm curious if there will be a bit of a shift in like what people value and what they're willing to do. Because I've been thinking about the trades for a long time.
Yeah. Mike Rowe has been a huge proponent of that. I've been as well.
Huge.
Because there's way too much focus on college, and I don't think there's enough people that understand there's another path to be able to make quite a bit of money. Sometimes it's more than what the college education makes. You just got to go learn how to weld.
Exactly. It's like right now, I actually have to get my septic system worked on. They're drilling a new pit or whatever. And it's like 6 dudes that are going to be at the house, and they're drilling the pit. It's like $17,000.
Right.
That's not a bad fucking payday. Obviously there's overhead. Like I'm not saying that everybody's making that much money and it's, super flowers and sunshine, but the dude that runs the business, he pulled up in a new Tesla. Like, you know what I mean? Like, they're
he's
not
doing all right.
Bad. It's not awful. So yeah, I think I wonder if there's going to be a bit of a capitulation there, because to your point on the labor force, especially, I feel like it's so tenuous, because then you also run into the argument of, well, how much of this is going to get automated out? A lot of this is getting automated out. And yeah, but I think because I was listening to the speech live, and I liked understanding the things that he's looking at, not because I can forecast those things any better than anybody else, but it's helpful for me to understand the lens that they're applying to these things.
Because now you know what to look for and how to interpret it.
Exactly. And again, I've said this a couple times, and I will say it again. Big Daddy J-Pow, he's been pretty rough.
Same message.
Same shit, bro.
It's been the same message.
It's the same shit over and over again. It's so funny. The market wants to run off the deep end every time they hear somebody else say something, but and this, in my opinion, doubled down or triple, whatever. How many, I don't know how you say, like quintupled down on the same thing, which I think is interesting. And I think you see that in the markets. It's being priced in pretty effectively. I was watching the futures pretty carefully to try to calculate probabilities, and there's actually been some pretty big shifts.
I think it's 75% now for 50 bips.
So here's the drama. It was 75% a week ago for 425 to 450. Then it dropped from 75 to 66 a day ago, literally yesterday. for 425 to 450, and now it's up to 79.4% for 425 to 450. So this, I highlight it because this kind of movement in probabilities is exactly where there's money to be made in derivatives, because the markets do not price as efficiently as people think it does. It's quite efficient. I'm in no way saying it's inefficient, but that's enough slop in what I just mentioned over the last few days to make good money. You know, the market is trying to price in a lot of very difficult things, and there's a lot of opportunity there.
The other thing I noticed today when looking at just the closing price of the SPY is that we finally broke above the 200-day moving average. Curious what your thoughts are on that. Do you follow those types of I guess indicators?
I actually get alerts on them, and not only did it break above
Solidly.
Yeah, not only did it break above the 200-day moving average, it did it on what I would consider to be impressive volume. It definitely was volume that almost doubled the 30-day average for volume, but it also broke above a trend line essentially that I drew that goes back 2 years. And that I find very interesting. It takes us from the high of the week of 3 Jan is the trend line that I have drawn. And it broke above that.
That's 2 years or 1 year, isn't it?
Yeah. It's a 2-year, like it's on a 2-year chart. That's just where it's shouldered out. But
Okay.
yeah, the trend line is valid for a year. But on that, I mean, it had a touch on 3 Jan. It had a touch on the week of 28 March. It had a touch on the week of 15 August. And today is the first day in that time frame it's closed through it. All of that is to say, I still think we're going down. I literally think nothing has changed. I look at, again, a 2-year chart, and we are in like the most clear stair-stepping pattern down. There was a strong catalyst today to move us about a little bit, which I get. But I do not in any way think that this changes the broader narrative, at least for the time being.
What do you need to see in order to think that has flipped?
That's a really good question. I think I need to start seeing at least some basing, and I think we're starting to see it, but I think it's early. And the other thing that I would like to see is on these drops, when we do have, the eventual pullbacks, I would love to see volume drying up. And it's really not, like, it's not at all. When I look at the chart, it's when we're getting these strong rallies that price is cleaning up, or volume's cleaning up real quick. And then as we start, in the cycle of pullbacks, volume is ramping up. It's like the inverse of what I would want to see.
Right.
So most of what I see today is just a catalyst driven movement. Because I mean, you could also argue that we closed above the 200-day moving average on the 15th of November. We were above it on the 23rd of November, on the 25th of November. So, this isn't, the 200-day moving average is useful, but it's not like this magical thing. I think it's a tool to use in confluence with other things. Like, I would also argue that the movement of all of the moving averages, I like to use things like the 9, 20, 50, 150 or 2, whichever one you prefer. I think that, seeing price move about that is, and the moving averages starting to align, meaning, shortest term moving averages on top, everything else is upward sloping. I think that's all good. But to me, it looks like we're just having a pretty good rally from the 13th of October. We were up like 15% on Monday, obviously a little bit more than that now. But I think, I still think there's not enough here, at least to rationally say that, yeah, we're starting to pull out of the bear market. I think it's too early.
I think let's see what happens the rest of this week, and then we can reassess, see if we stay above that or not, build some volume up here.
Yeah, exactly. I think that's fair. And I think we're starting to hit some near-term resistance. Yeah, I mean, nonetheless, it's still an impressive move. And this is one of the reasons why I like trading options, to be honest, is because the market's down. It hit a high of 479 back in January. It hit a low of 348 over the past year. So that drop from the open of the year, not the high, but the open to 348, that drop is 14.4% in SPY. And, this is the funny thing about percentages, man. We dropped 14% to where price currently is now, but from that low of 348, we probably have had like a 15% plus rally. Like we see a certain percentage drop and we think, oh, we just have to make that percentage back to get back to even. And it's like, nah, fam, it's not how percentages work.
No, it doesn't. If you ever done an analysis of like how hard it is to recover from 10% drawdown, 20% drawdown, 30%, there's a really interesting chart. Maybe I should find that and link that for anybody who hasn't seen it.
I think that actually that would probably be really useful context for people, to be honest. Yeah, because I just did the math. And right now, from the near-term low from October 13th of 348 to the close of 407, it was like 407.68. But, fuck you guys, 407 is fine. And
close enough.
Yeah, that's a 16.9% move. So on a percentage basis, it looks like, we should be cruising right along. Everybody's stoked on that. But it's like, technically, we're only down, 14% year to date.
Right.
Those shorter interim moves, you need so much. It's like a, short rule of thumb is 2.5 times the move essentially in order to get close to where you were before. So got a ways to go, man. Well,
on that disappointing bombshell, I suppose, to the Bulls, at least, the Bears are still happy, it sounds like. I think it's probably time to wrap things up. So, Eric, thanks again for joining us. I'd like to tell everybody out there that wants to hear more from Eric, they should definitely check out his YouTube channel, ES Invests. You can also find him on Twitter. Eric, you got anything you'd like to leave the fine folks with here before we sign off for the day?
No.
Fucking love it. All right. Well, with that, I'll just say goodbye. Bye.
Bye, everybody.
It sounds so surly when you do that.
If you look around, there are so many ways to make a difference. At Capella University, our FlexPath format gives you a different way to earn your degree. Take courses at your speed. Move on whenever you're ready. Education should fit your life. Learn more at capella.edu.
Robinhood is an investing platform that helps serious investors with their financial goals by giving them the tools to run their money on their terms, so you can make power moves in your power suit, even if that power suit might be fuzzy slippers or an oversized sweatshirt. But hey, that's what makes you you. Run your money with Robinhood. Learn more on Robinhood.com/podcasts. Stocks and ETFs offered by Robinhood Financial LLC. Member SIPC. Crypto offered by Robinhood Crypto LLC. All investing involves risk.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.